Hi, this is Randy Finney with Right Side of the Chart, and this is a early session update for Friday, August 9th, 2019. I wanted to get this one out there. A lot of the same as far as levels that I'm watching in the last night's update, so not a lot new to report there, but a few other things I wanted to mention. I want to go back out, flip back out to the daily time frame. I've been focused a lot on the 60-minute charts. Remember, I always keep an eye on the longer term time frames or watching developments there. If you want to look at the bigger picture, here's a potential wedge here on QQQ, a potential uptrend line that we hammered off this week. So there's a reaction so far with, that we hit it. And so there's one to watch. And again, that's bigger picture, and this is what formulates everything I see here, formulates my intermediate to longer term bias. But then of course there's the daily charts. Weekly charts can take many weeks, months, even years to play out, whereas you kept down, kind of hone in on your entries and where we're going near term down on the daily and even intraday charts. So a couple things I wanted to point out that I haven't recently. Oops, here we go. Sorry, I just hit the pause button instead of this tool here. Tried to grab this. Everything else I've talked about, the bounce off the support, we were oversold coming in there, the trend line bounce back into resistance here. But one thing I didn't mention, and I want to point out, is the PPO signal line. I often cover this. I use this as a trend indicator. It does a pretty good job on some securities, better than others. And what I look at is on your PPO, and if you don't have a PPO, I get this question a lot. It is a very close cousin to the MACD. Put a MACD up, you'll have something very similar looking, especially on the indexes. Some stocks, it makes a bigger difference. Weekly charts, I think it makes a bigger difference, and that's really where it stands out. But shorter term charts, especially intraday charts, you can use a MACD. And what I look at is when the 9 EMA, which is called the signal line, the orange line's your PPO line, when that is trading above that zero line that I just highlighted there, you can see the trend is bullish. Nothing's 100%. Sometimes you get some whipsaw signals, but even then, crossed right there. So pretty much it told you all through here up until this point right there where it crossed, the trend was bullish. And then if fired off a sell signal right there. And it really, again, I don't use this as a standalone trading. I don't go long. It just helps to confirm trend changes. So, for example, right here, if you remember back in the fall, if you were, on the site or even following the YouTube channel, this is where I was following the markets. QQQ and SPY broke down, but XLK hadn't yet. And when XLK broke, I said when tech breaks, the market breaks. So we had some major sell signals back there. And then you can see, boom, shortly afterwards, not right away, PPO crossed below, and it stayed below, and it didn't cross back above then. So you can see with, this is 2 years of price history here, and with very few exceptions, a little whipsaw signal there, it does a pretty good job. Of course, a whipsaw here as well. As I always say, there's not any single indicator in trading that's perfect. If there was, you're not going to hear about it, because whoever has it's going to hoard it to themselves, and they're going to make millions and millions and then billions of dollars. So there is no such thing out there. You just have to kind of take everything in with other things. And so, right now we have, those sell signals recently on the market. There's some other levels that I'm watching to go soon, such as this trend line, such as the recent lows, everything that I've covered in recent videos. And then watch for this PPO if you get a solid cross down below there. The PPO line, that's the faster of the two to act, is starting to turn back up, but the signal line's heading down. And I like to use the signal line, the 9 EMA, because it's it's a moving average, and it's the last of the two to cross, so it helps filter out some whipsaw signals. And again, sometimes it works better on some securities and some indexes and others. It's just one of many things that I'm looking at now. Price comes first before things such as moving averages and other things like that, and indicators. And right now, if you've watched last night's video, I pointed out these uptrend lines. Two things, the big level, the top of my bounce target zone there, 188.37 on QQQ, which we hit yesterday. And there's that trend line break today, which I said, that was, an objective short because it was a bounce into resistance, and then the next sell signal would come on the break of the uptrend line, which we got today. Came after, right after the open. So that's that. And now remember this too in technical analysis, if you're new to trading or charting, support or I should say resistance once broken becomes support. So I had a support zone here. Now I'll say this too. I put a higher weighting on the most recent price action, and at that point we did pause there and then we popped on through it. So it's not a very solid support zone right now, but it is. I guess what's more important there is the top of that gap right there. I mean, technically speaking, the top of the gap was up here where QQQ closed last Friday, a week ago. But there's a lot of, this cluster of candles there. So I think that's, to me, a more important support right now. And that's about where we're at as I'm doing this video, coming up on it now. I could and should move that line up a little. I'm just leaving these lines where they've been for a while. You know what, might as well move it up now because it's more important where we're at. So there it is. Capture the bottom of those 1, 2, 3, 4 candles there, about 186.25, which is just about what we hit today. Yeah, low of 186.21, and so that's next support. And like I like to say, support is support until unless broken, but I think this one will be broken. If you are watching the video, you're a member of the site, because this is, intraday analysis, all that stuff is members only. You probably already saw the post on the front page on the futures. I'm going to get to that in a second. And again, this it drives home when I get to the futures why I like to keep an eye on both. And I say this often, even if you don't trade futures, you like to trade ETFs, you should keep an eye on them because it tells a different story than the indexes do sometimes. There's different things you can pick up on due to the fact the futures trade around the clock. So I'll get to those in just a second. I just wanted to, for QQQ while I'm here, tell you that that's, now you remember the gap once entered, I said would likely be backfilled, as most gaps are. Well, same story now. There's gap support now, the top of the gap. So if we enter that gap by a fair amount, we're probably going to backfill it. So that's what to watch for. PPO is starting to curl down. This is a momentum indicator. You look for a bearish crossover there. That would help to confirm, that we're probably going lower. So these are levels to watch. And at the end of the day, I like to say this often: support is support until unless broken. So that's our, support there, about 180, or today's low, call it 186.21 so far on QQQ. SPY. Same story. There's the uptrend line broken. There's your sell signal. We stopped just shy of my 294-ish target yesterday, and so far we've moved down. Same, pretty much the same technical posture. Same story with those gaps over above. Now let's get to the good stuff. Again, this is, I talk about the futures, and I say this often: if you don't have a futures account, some brokers like TD Ameritrade's Thinkorswim platform, they do offer free real-time futures charts, streaming charts, and investing.com. You don't have to have an account with them. You can create a free account and then save. I have a watch list for futures on there, all kinds of futures, agricultural, commodities, and index futures. So that's a useful tool. And I did a video on how to configure investing.com. So if you're new to the site or you haven't seen that video, just let me know. It's on the YouTube channel, probably under educational, on the watch list, right side of the chart, YouTube channel, so you can check it there. And if not, just drop me a line, I'll give you a link. All right, so what happened today? This is what I posted in pre-market. And again, this is why you want to watch the futures. You don't see this on QQQ or SPY. That's what I'm talking about. You have a different story because you have a lot of other candles. The futures trade virtually around the clock. They shut down, for an hour or so after the market closes every day, a little bit after, just kind of square away, and then they resume trading. So these are pretty clean. We had this impulsive move up right here. You have a downtrend right there. It takes the shape of a flag. It was a little, when I posted it earlier, it was only right here. It was a smaller flag. Either way, that's what happened is we popped it, and you can see when we popped that flag, let me get a little tighter here for you. See this candle? We went right up, and that's that same level all the way back here at that level, and that was the same as my QQQ maximum preferred bounce target, or uppermost bounce target on the Qs. Was aligned with this 77.22 level. Remember, we hit that yesterday right at the close when QQQ hit my support, or max target there, resistance I should say. And so today We popped it, and this is what I said in that post. Fewer things in trading are more bearish than a failed long side breakout. Works the other way in reverse. Failed, when you have a bearish chart pattern and you break down, you break support or something, and then all of a sudden, if that breakdown it starts to look good, gets going, and then reverses, what happens is two things happen. You have longs that took it. If I was bullish. And this is part of trading. I'm not a mechanical trader. Some people, and I hate and maybe that's what they do. They say trade the charts, not what you think will happen. Well, that's not my trading style, as you guys probably figured out by now. So I see a bull flag, and I think it's going to fail. I'm not going to take it. Whereas, longs those bullish or just mechanically trading the charts would have took that breakout there, and then so what happens is they go long, active traders. Even if I was bullish, I wouldn't have taken it until that level is cleared. I don't take a breakout that occurs when you have a significant resistance level overhead. That's one of my rules right there. So even if I was bullish, I would have waited till that level cleared. Now, so those that took it, then all of a sudden they realize they're wrong. They go down, they're immediately underwater, they're continuing to get underwater. And if you're trading, if you're a disciplined trader, then the way you trade a bull flag breakout is you take the breakout, and then you put your stop somewhere below. So those stops are getting cleared. And so not only do you have those that went long selling, but then you have, the shorts come in. They smell blood in the water, and they say, okay, failed breakout, I'm going to short as well. Not that easy. Now, look, I usually, this market's been tough lately. It's been taking buy and sell signals and chopping them up and reversing them. The computers are really ruling the roost here lately, meaning the algos, those algorithmic trading programs, they're, that's like, they use AI and all that stuff. They look at, of course, they have visibility to things you and I don't, but they're looking at where retail traders and institutions, they're trying to make money off everybody, where they're going long, where they're going short. So and so what you're seeing is a lot of patterns that are sometimes will get these false breakouts because maybe the algos all shorted that breakout. Actually, they're not all on the same page. I'm kind of digressing here. They're all going to do their own thing. So let's just take the charts for what they are. Let's just forget about what I think might happen. So far, that is a failed breakout, and failed breakouts are usually a very impulsive and swift move in the opposite direction. So on a failed bullish breakout, it goes that way, for the reasons I just stated. Those that took it are wrong. They have to then sell. Selling begets more selling. That's what causes the very simple. If you don't know what makes a stock go up or down, it's simply supply and demand. If you have at any point in time, any second in the market, any day, any year, whatever time frame you're looking at, if you have more buyers than sellers in a security, the price is going to go up. And if you have more sellers than buyers, it goes down, and it is that simple. So this is what I look for, and that's what technical analysis tells us. It tells us where the buyers and sellers have met, where the important points are, and so therefore, if this continues to play out, and of course, as each support level goes, I have 76.22 there, but I can put a line right below it because we had some more recent reaction highs right about here. Let's come down, give it the benefit of the doubt. 76.04. We'll call it 7600. So that's a pretty important level. But remember, we also have the gap right there as well. We're testing, or we're getting close to that. And I'm going to give you another line right here for you NQ traders. I see a lot of reactions right here. I see a reaction low right here on the trend line, and then where we're at today. So we go much lower, we probably go down. This is all kind of near-term stuff. So let's just watch what happens there. Let me go to ES, show you the same thing. ES, the flag popped briefly, and again, the ES was rejected at resistance there. I had that line all the way from back here, 29.35. We hit it yesterday. As I mentioned, there was a slight drift after the market closed at 4 p.m. where the futures continued to trade. They went a little higher. So it was essentially a near perfect tag of my max bounce target. And then we hit it again, almost to the penny. You can see as you zoom in, look at today's candle, that white line right there. So again, that's why you hold off on taking a breakout. Look, that line is still resistance. So if all this changes, I gave you in the post this morning, I told you bullish if that goes with impulsively, and bearish, and I made it clear, because I don't just say, well, the market can go up or go down. Everyone knows that. That's a given. I'll tell you if I have an opinion which way I think it's going to go, and if I don't, then I tell you I don't have an opinion, and in that case I don't make a trade. But in this case, I figured we'd go down. So now I'm watching pretty much this 2114. That level is still active, or valid, I should say, from a support level. There it is. See these reactions right here, reaction low, reactions there. So that's it. Probably, I guess, just wanted to show you some of the things to watch on the daily chart, point out we had these breakouts, and so if the scenario posted this morning on the front page plays out, let me pull that up for you. Okay, right here, this is this morning's post, stock futures, bull flag breakout or fake out, and that's it. So there's that breakout, and that's the bearish scenario. And like I said, it's likely to to continue to sell off pretty impulsively, but there's work to be done. I just went over those levels. We can grab support and we can still go up. We're not, in other words, it's not an all-in sell signal. It's my preferred scenario, and it's certainly a possibility. But the way it works is, now on the way down, if and as each support level is taken out. So in other words, if we go much below this 2914, which we're starting to crack now, then we come on down here. I'm going to move this line at this point down to here, catch these reactions right there. I see reactions from there and there. So my next support is all the way down to about 2900 or 28, 2900, 2895. Let's see if that aligns with NQ, because you want to watch both. Where's my NQ chart? Got it here somewhere right there. I already gave you some levels. Let's take this one away to kind of clean things up. Okay, so that's it. 7605, we'll call it right there. So that and those ES targets, if we go much lower, below where I'm doing this video right now, that opens the door for the move down to those levels. I wanted to add this too. I mentioned before that was, my, final area to add shorts. I think it was a very objective level to short. I was this close. I'm holding my fingers like a little pinch. This close to adding QQQ and SOXX as a short trade yesterday, or SOXX. I'm going to go over SOXX. SOXX had come up here and backfilled the gap, overshot it by a little bit. That's the semiconductor ETF. I think there's more bang for your buck. If you're new to the site, I've done some videos recently. I plan to do another one soon covering the individual components, but I did a kind of a broad overview of all the semiconductor ETFs in the sector, going all the way out to the monthly charts. And what I showed you there is fewer sectors can put such big gains in your pocket if you catch these trends. There's some choppiness here, but there's big powerful trends to catch in the semis. And I want to show you guys, I've started to mark up some levels because I may get this out as an official trade. I was really very close to adding it as an official trade yesterday, and for whatever reason I held off. We had put on wheat. These are potential targets here. SOXX is a 3-time leverage, so you have to keep that in mind. Keep your position size to about 1/3 of what you might normally do if you were shorting SOXX. The reason I may sometimes use this as the official proxy, it allows those to, if you want some short exposure in your IRA, for example, maybe a hedge against some long positions where you can't short individual stocks or ETFs, you can buy this and as a proxy to short the semis. And so therefore, that's why I'll use that sometimes. So levels here, you can see these are all marked levels. This is a longer term target. I'm going to add this as well. These levels that I have here, that would be about a 10% pop to my first target, which is, it's a nice target too. It comes in around the downtrend line and that 53.84 price resistance. That's the big level, 53.84. And then about, you can see 59.38. These are unadjusted targets. That'd be about a 20% pop. And then up to this one here would be about a almost a 40% pop. Now what I was going to get at here, when I set longer term targets on SOXX SOXS, I'll have to, from time to time, adjust the targets because you have decay. Decay I talk about in ETFs. There's two things that make some ETFs much, much more prone to decay than others. Number one is the amount of leverage. In other words, all other things being equal, a 3-time leverage ETN will have more decay than a 2-time leverage ETN that tracks the same sector. And then the other component is how volatile that sector is. So semis are very volatile. On a scale of 1 to 5, they're probably a 4. The worst are your VIX tracking ETNs, natural gas. Those things are god-awful long-term. You do not want to hold those things as a long position for anything more than a quick trade, lasting a few days, hours to days, or even weeks, depending on the trend. This one, if you get into the right move, and I've talked about it, if you get in what I call a unidirectional trend like this, you can actually, not only will you not suffer decay, but in that case, you can actually do better than 300% what the index did. It's not always so easy to get in, identify those unidirectional trends, but I'll say this. This is why I'm doing this video. It lets me, put my thoughts into words a lot, better than the front page post. It's a big if the market takes out those recent lows that I've talked about on SPY, QQQ, if we go back, even if we take out a good part of the move, let's say we even get back down there, if we wipe out these big green candles from yesterday by a fair amount and go well below the bottom of those gaps right there, that's going to open the door to move down, especially if we take out with conviction the recent lows. That could open the door for another big wave of selling, something like this, and quite likely even more. And so where I'm going with that would be, if we do it, I highly suspect that it'll look something kind of like this and not something like this. Up, down, up, down, up, down. This is when you don't want to be in those leverage ETFs, or at least they can work against you. If you don't understand why, I explain that in the FAQ page. It's simple, the math. When I do I think a pretty good explanation of how and exactly why that decay works that way. It's not. It's again simply due to the math, and especially when a stock or security is going back and forth, closing green one day, closing red the next. That's where decay sets in. Moves like this, you don't have a lot of decay, especially moves like this. So my point to you is, I'm fine holding a semiconductor short for weeks, maybe even months on something like SOXX, depending on the nature of the trend. And if you want to avoid that decay, there are 2-time leveraged ETFs and non-leveraged ETFs, I believe. I could be wrong, but maybe not for the semis. I'll have to look at that. Or you just short SOXX, and then you don't worry about decay. And the other one with a lot of potential, like I said, there was still a little work to be done on the indexes. We've got to undercut those recent lows. We've got to go a little bit lower today. And as I said, going back to that, beginning of the video with the futures and QQQ and SPY, as and if each support level goes, that increases the odds we're going lower. So you can continue to scale in short if you're not at a full short position, or you don't have any yet. You want to wait and see what happens. It's still, by at least in my opinion, still objective to short, even if the market continues lower. At least for another 3-4%, because that's going to increase the odds that we're going to continue to go lower. Another trade idea with a lot of potential. Again, there's a little work to be done, because if the markets can rally up and take out today's highs with conviction, take out those resistance levels, the VIX is going to continue to fall. However, if the bearish scenario I laid out plays out, then this looks like another objective entry on TVIX. Remember, we broke out. This is the 2-time short-term volatility index ETF, tracks the short-term VIX futures. We had a buy signal here. Big breakout, very impulsive. Then we took out the secondary trend line, and we're coming in for a near back test, but you can see I have support, and I've shared this chart with these targets recently. And so we pulled back yesterday almost perfectly. Remember, this was, again, I think I shared this one over a week ago. And let's see what yesterday's low was, 1744 versus my support zone right here, bottom of which was 1745. So that was an objective long entry. And I think it's still an objective long if we get another thrust up. Finally, we'll look at the VIX itself, because anytime you're looking at a ETN that's tracking something else, you want to look at the underlying. And this is how the VIX works. We had a clear buy signal on the VIX. You can see that. And I've gone over this many times. With things I look for, I like to align my analysis on the VIX with the broad market, and it usually will. When we have these divergent lows on the VIX, that one led to that rally. This one led to this rally. That was before it was all said and done. Here's another divergent low, led to that pop, and this divergence has only extended to this point, you can see, and now we had this buy signal. Now where I'm going with this is the VIX, sometimes you get these one and done. This was a one and done move. I mean, well, you had a second up, but the peak was right there. But quite often, and this one was huge, that was the implosion of the short volatility trade. But this one, for example, this is usually what you see. You see a move up, correction, and then a second move up. And again, at the very least, you can see here when this one went up, we had that second pop. So it's not impossible to see this, but from looking at this, and it jives with what I said in the stock market, usually at least you get an ABC move. So there's most likely another leg up. What we saw in the stock market, the impulsive nature of that drop, as I said before, it's very unlikely that was it, and it's where market's going to go to new highs, and that's it. Same with the VIX. So if we have another leg up, there's some more upside in the VIX, and hard to identify. Where does it go? I think it could certainly undercut that or take out that level. And when it gets up in the high range, I'll tell you, the VIX, the thing about the VIX is you want to go long down when it's at the bottom of its support range, and not just long because it's pulled back there. Sometimes it can trade for weeks or months there. You want to go long after it's come off that low level with a buy signal. And even better or more important to me than a buy signal on the VIX, like this breakout, is a sell signal, a solid sell signal on the market, which is what we had right after the Fed announcement. Because again, if the stock market doesn't drop, the VIX isn't going to go very high. All right, that's it. So we'll wrap it up there. So pretty much we looked at the stock market and then two highly related things, the VIX and the semis. I say the semis are related because the semis, are pretty much the leader or the canary in the coal mine for the tech sector. And tech, as I always say, is it's the largest weighted component of the S&P 500, of the NASDAQ 100, and everything else. So that was our sell signal back then, and it's still in play right now. And so far, that kickback rally we had yesterday seems to me, I can tell you with 100% confidence, it was a very objective shorting op. Whether it's going to prove to be, a great shorting op is yet to be seen, but I think so. So far everything's looking pretty good. And again, the thing about objective shorting ops is, you just set your stops a little bit above. And you either make money on this trade or not. That's trading 101. Nobody bats 1,000. Nobody in the stock market bats 1,000. So you just have to take these objective shots. Don't get married to your trade, meaning use a stop, and you keep doing that, and you cut your losses and let your winners run. It will pay off in the long run. All right, let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.